Okay, so now let's go ahead and take on another example on dividends. It is a question from your study mat. Here we go with the question. Yes.
In the month of May of the current financial year, shares of RT Limited was sold for rupees 1,460 rupees per share.
So that is supposed to be the current market price. So you can say P naught is rupees 1,460. Next.
A long-term earnings growth rate of 7.5% is anticipated.
The growth rate or the G is given as 7.5%. In decimal format, it is 0.075. Next.
Now, RT Limited paid a dividend of rupees 20 per share.
So there is a dividend already paid. Supposed to be the D naught is rupees 20. Then.
Number 1, calculate the rate of return an investor can expect to earn assuming that dividends are expected to grow along with earnings at 7.5% per year in perpetuity.
So it is given that calculate the required rate of return. Nothing but find the cost of equity using the dividend discount model you can use, right?
Yes.
D1 by P naught plus G. It is given that the dividends will grow at what rate?
7.5.
As 7.5% in perpetuity. Next.
Next, number 2, it is expected that RT Limited will earn about 10% on retained earnings.
So 10% is supposed to be the return expected on retained earnings. If retained earnings are reinvested, you'll earn 10%. Next.
And shall retain 60% of the earnings.
60% of the earnings will be retained by the company means 40% of the earnings are paid as dividends. Is a dividend payout. Next.
In this case, state whether there would be any change in growth rate and cost of equity.
Will there be a change in growth rate? And also you're supposed to calculate the revised cost of equity based on the new growth rate. Is that fine? So these are the questions asked. Yes, let's go to the solution.
Yes.
The first part is very, very simple. I'll just use the formula, that is cost of equity equals. It is D1,
By P
that is expected dividends, which is D naught into 1 plus growth rate divided by P naught, which is the current market price, plus growth rate. You learn this formula even in the chapter cost of capital, right?
Yes, sir.
So here what is D1? Rupees 20 is D naught, dividend already paid. So rupees 20 into 1.075 will give the expected dividends. And divide that by rupees 1,460, and then plus the growth rate is 7.5%. Or you can say 0.075. When you do this, how much you get?
0.0897 or 8.
Or into 100 is 8.97% is a cost of equity. Is that clear? That is the first part of the question answered. Now, what is the return on investment is 10%. Okay. And the company is going to retain how much? 60%. Will there be a change in growth rate? The answer is yes. Now again, you all know this formula. What is the retention ratio?
Into
The return on investment is a growth rate. So in this case, what is the retention ratio?
It is
60%. Or you can say 0.6. That into what is the return? 10%. If I do 0.6 into 10%, that is 0.6 into 0.1 if you want to, you get 0.06 or is 6% is the growth rate. Have they shown that?
Yes, sir.
Yes. That is 0.6.
0.06
or 6% is the growth rate. Yes, there is a change in growth rate. Yes or no? What is the growth rate earlier given? 7.5%. Now it is 6%. Agreed. Now, how to calculate the cost of equity? For that, I got to calculate what will be the D1 if 40% of the earnings are paid as dividends. Yes or no? Instead 60%. That is 60% retained, 40% is a dividend payout. For that, I got to calculate what was the EPS last year. Yes or no? So for that, what I can do, I am supposed to find the retention ratio last year. What is the retention ratio? Just see, we know 10% is a return on reinvested retained earnings, right?
Yes,
10%. We also know the growth rate is 7.5%.
5%.
I can say that retention ratio I don't know, but that into 0.1, that is 10%, equals the growth rate given earlier, 7.5%. Have they written that? 0.075 equals, it is
B1 into
B1
0.1.
retention ratio, I don't know, that into 0.1. If I solve this, I get how much? 0.75 or 75% of the earnings are retained. That means the balance at 25% represents what? Dividend payout.
Yeah.
So 75% is retention ratio, 0.75 or 75% means 0.25 is a dividend payout. Yes or no? Now you know last year what is the dividend paid by the company? Rupees 20. Rupees 20 represents what? 25%, 0.25. What is for 100%? I'll get the earnings.
Yeah.
So rupees 20 divided by 0.25. How much I get? I get rupees
80
80
rupees earnings.
is the earnings per share last year. Now what is 80 rupees into 40%?
It
That is
32
as per the
rupees.
new retention and dividend payout. 40% payout. Because 60% retention. Rupees 30.
Two.
That would have been the D naught. Had the company retained 60% and paid 40% last year. Yes or no?
They said it's D1.
They said D1, right? It's not D1. It is actually what? This rupees 32 supposed to be. Remember what is 20? That is D.
Not. Paid.
Not. D not. Dividend paid. Remember last part also we did 20 into 1.075 to find D1.
Yes.
So dividend already paid. Rupees 20. Therefore rupees 80 is the earnings per share for the previous. That's why I said E naught. EPS 0. Right? Now 32, please mark it as D naught. That's where they gone wrong in the solution. Rupees 32 is D naught. Now how to find the cost of equity based on a 6% growth rate? Now guys, please check this. There is a mistake in the study math. They've taken 32 and calculated, right? They are wrong. Please remember, rupees 80 is earnings for the previous year. Got it?
Yes, sir.
Of that, they paid rupees 20 dividend for the previous year. That is the D naught. So therefore, rupees 32. When you take 40% of 80, you'll get what?
32 rupees.
You'll get rupees 32 as D naught. That would have been the dividend last year, the D naught, had the company paid 40% of their earnings. Is that clear? Now coming back to this computational cost of equity, write down this. It is cost of equity equals, yes?
Yes, sir. D1
Rupees 32 D.
divided by
32 into
D1 divided by P
D1 by
plus
P
G.
naught plus G. First write the formula if you want to. D1 by P naught plus G. Then you can write the next line.
32 into
It is rupees 32 into 1.06, 1 plus growth, 1.06 divided by rupees 1460 P naught, 1460 plus 0.06 growth rate, and whatever answer you get, finally into 100 you can do. Now tell me, Renika, what is 32 rupees into 1.06?
33.92.
It is rupees 33.92 and divide that by divide 33.92, right?
Yes, sir.
Okay, divide that by 1460. 1460.
We get 0.0232.
And then plus
0.06.
0.06. How
We
much
get
is it?
0.0832 or
Okay, that into 100 is 8.32%.
percentage.
Is your revised cost of equity. Please remember, guys, rupees 32 is not D1, it is D not. Is the dividend that would have been paid in the previous year had the company paid 40% of their earnings as dividends. Is that clear? Got it?
Yes, sir.
Okay, guys, so we are done with the solution. Good luck for examination. Bye-bye.
Yes.